your thoughts on the session today?
It was red all across the board, and unfortunately a very negative session for the Australian share market, and the volatility really just continuing from the low that we saw for the market on Monday, which was below 5,000 points, to the high that we saw yesterday was a swing of 5%, and these swings have become increasingly normal on the Australian share market. Last week from the high to the low it was 5.2%, and in fact the average for the last 6 weeks is 5%, and that's significant because the same time last year we were looking at just 1.8% swings. Now, a lot of that volatility has to do with nervousness around this FOMC meeting next week on US interest rates. So that's something that we're watching very closely. But big moves on the upside as well as the downside, unfortunately, tends to be a negative environment for risk and for investors. It's a great environment for traders, but not so good for longer-term investors. Lots of news to absorb on the market today. We saw the job numbers here domestically. We saw inflation numbers out of China. But altogether, we were mostly watching the negativity on the market. Every single sector trading lower. In the top 200 stocks, only 1 in 20 managing gains. There were a few standouts, and these were mainly in the small cap space. We saw Bellamy's as well as Blackmore's reaching an all-time high on the market. If we have a look at these stocks, they've been doing fantastically well in 2015. Blackmore's is up 250% in the year to date. Bellamy's, which does baby formula out of Tasmania, that's up 300% in the year to date. And can I say, both of these companies have CEOs that are females, also quite unusual on the market. So a pretty horrible day, but there were some standouts on the market, but very few and far between.
Your own best guess, and that's really all it is at the moment, is a guess as to what they'll do at the September meeting next week?
Well, I guess I'm on the side that they won't move. I mean, just speculating about interest rates in the US has caused a lot of this volatility that we are seeing in markets. And, you know, it's a very small move that we're talking about, 10 basis points, 25 basis points. I'd hate to see if it was talking about higher rates. Interestingly, outside of the global financial crisis and the moves thereafter, if you have a look at the historical correlation between interest rates and the stock market, the two do tend to move together. That is, when rates are going up, usually the market's going up, and when rates are going down, usually the market also is having a pretty hard time. But that correlation, especially for the US stock market, has broken down since 2007. And this is an extraordinary period where we have seen rates way too long over in the US, and it has caused, I guess, an inefficient use of capital. So it's going to be interesting to see what a rate rise signals to the markets if it does happen in September. But given the enormous volatility that we're already seeing from speculation that we'll see interest rates rising by the end of the year, I think the Federal Reserve might be on hold in September.
Wouldn't the option of getting that first rate rise out of the way then help to put to one side the speculation and ease that volatility if it is being caused by speculation over when they will do it?
Look, I think the problem is not so much the US interest rate rise. They do need to raise rates at one point or the other. But the fact that it is coming at a time when global growth is under pressure, especially in terms of China, where the market is repricing growth expectations in China. So it comes at a time when, you know, global growth expectations are looking quite shaky. So I think it's more around the timing of it. If the US was strong and China was strong, that would be a great time. But the fact that we are seeing some big changes coming out of China, growth looking a little bit shaky there, and then the US talking about raising interest rates into this weak global environment, I think it is causing a lot of nerves.
Which brings...
Certainly does seem to be a bit of stabilization there, and there are a lot of attractive things about the miners, especially in terms of valuation. The thing I struggle with, though, is that the bottom in commodity cycles usually does take a long time. So usually there's no rush to get in on stocks, and I guess the risk involved still with the volatility that we are seeing. So I guess one way is to buy calls. That way you have limited downside, but you have access to the upside if you don't want to actually hold the stocks. But really, if you have a look at the volatility in these stocks, they are great for trading at the moment, and if you do see them getting to oversold levels, you can see quite violent moves in a very short period of time upwards. So really great news for traders. I think for investors, you do really have to have a stomach of steel, but another way to gain exposure is through options. Buying a call, you're limited in the premium you set out, but you have access to all the upside.
Michael.